Alright. So I want to now teach to you something related to convertible bond. The calculation is ultimate easy. The question is really easy. And it is also being asked in the exams. Just that it has a lot of terminologies for which I will try to make it as easy as possible. Alright. So from this question onwards, Omkar, you would be able to connect to what is going on. Everyone in the class, it has no use of your valuation thing or YTM thing, nothing. Alright. So Dhananjay, it is, yeah, one page primarily. This one though we can write anywhere. This one is fine. No, we don't have to worry about this page, but yeah, this particular chart you will have to manage. Alright, please listen to it. So everyone, do you all now know what is a convertible bond? Right? So any bond which is an option to convert to common equity or the equity shares of the company. Right? Sir, when do you get this choice of conversion? On the maturity? Not necessarily. Even before maturity, you may get it. Right? That specific questions that we will go through and we will figure out when is the option of conversion. But do you agree conversion is not a compulsion, that is an option with the investor? You have issued the bonds to me, you are the company, I am the investor, right? I will have an option, you have given me the option, so I will have an option. If I want, I can either redeem it simply just like any other bond, or if I want, rather than redemption, I can opt for conversion, in which case I will get the shares of the company. Is a convertible bond 100% clear to you? Because if that basic thing is clear, all this discussion will be super easy for you. All right. So now imagine that, sir, you have an amount in hand to invest, right? So for example, you have an amount in hand available to you to make this investment, for which you go to the market and you buy debenture. At what price you would be able to buy the debenture? Sir, whatever is the price prevailing in the market, right? Basic thing. All right. Now, this debenture when you buy, right? If you want, you can also convert it to certain equity shares. So against every one debenture, how many equity shares do you get? Is it one, or you can get more than one? So obviously against every one debenture, I might get 20 equity shares, for example. So first thing you need to understand that every one debenture is converted into how many equity shares is first of all called as conversion ratio, people in the class. Against every one debenture, how many equity shares do you get? Everyone in the class is called as conversion ratio, for which meaning I will rewrite for you people. It was actually being written in Hindi, to which I will convert to English right away. Conversion ratio simply means, hold on for a second. Conversion ratio simply means, wait, hold on for a second. It's like how many equity shares against every debenture. So certain things, as I said, correct. So we can do it two ways. First, we can focus on learning everything so that the updation and everything we can do later on. So conversion ratio funda is very clear that if I buy a debenture, if I need to convert it to equity shares of the company, how many equity shares will I get? Cool. Do you agree? Obviously, equity share will also have a CMP. Equity share would also be trading at some price, right? That will be at its CMP. Cool. Now the next terminology, everyone in the class, is conversion value. Conversion value means, sir, I paid an amount to buy the debenture. If those debentures are converted into the equity shares, do you agree after conversion they will have some other value? That debenture which right now has a CMP in the market, since it is being traded, that debenture has a CMP in the market. But after I convert it to equity shares, how much value that each debenture have? But sir, debenture won't even exist. Will the debenture exist after conversion? No. But in terms of equity shares equivalent to the debenture, how much will be the value? For example, I have one debenture which has a conversion ratio of 20, which means it will be converted to 20 equity shares. Now imagine that price per share, people in the class, is rupees 60 per share. Price per share is rupees 60. So what become the value of one debenture after conversion? One debenture gave me 20 share, per share is 60. So can I say the value of debenture post conversion will be around 1200, everyone in the class? Such a basic thing to process. So it has a price maybe of 1100 in the market, but the conversion value, which means value of debenture if they are converted to shares, will be 1200. So even that is fine. Such a basic thing. The third one is conversion parity price. Meaning to say, sir, if I buy the share directly, what is the price in the market? 60. If I buy the shares directly, the price in the market right now is 60. But do you agree I have a choice? Rather than buying the shares directly, I can go to market, I can buy the debenture, and convert it to equity share. By that way as well, I can have my equity shares. People, ultimately to have the equity share, I have one more option, right? Buy the debenture and convert it. So conversion parity price. See, obviously the direct price is the CMP available in the market. Conversion parity price, which means if I opt this conversion path, how much is the price per share? How much is the value per share I will have to pay if I opt this conversion path? Sir, you paid rupees 1100 of CMP. You paid 1100 rupee to buy one debenture, and that gave you 20 shares after conversion. So for per share, on a per share basis, how much cost did you have to incur? So that is 1100 divided by 20. People in the class, conversion parity price is 55. Could I, everyone in the class, requesting your responses, explain these terminologies? So CMP is their direct prices available in the market. Conversion value is after conversion, how much is the price of debenture? And conversion parity. So see, there's a different. Conversion value is a different thing and conversion parity price is a different thing. Value is with respect to debenture. Value is with respect to debenture. Parity price is with respect to shares. Price, especially the word, you should relate it with shares. So examiner, if you have both the possibilities, examiner might give you conversion value of debenture and it might give you conversion price of shares. So generally it will clearly specify to you that of debenture or of shares it is talking. However, if it does not specify, please remember the value word relates to debenture and the price word relates to shares, particularly in this kind of question I'm saying. Easy, basic, right? So what is directly available is CMP, and what is calculated through or what is calculated other way around is that conversion value. Easy, basic, sorted. Sir, the next calculation becomes, so for example, let me make the numbers more specific to you. So let's imagine that the price of the debenture in the market is 1300, right? And conversion ratio is 20, which means against every one debenture, I will get 20 shares, where price per share, for example, is 60. Can you people give me the number of conversion value very quickly? That if I convert one debenture to shares, how much will be the value, conversion value of debenture? Sir, value will be 1200, which is 20 shares into rupee 60. This one you give me surely conversion parity price will be how much? If I buy the share. So basically conversion parity price is value of share by way of debenture, and conversion value is value of debenture by way of share, simply if you realize. So conversion parity price you all need to give me right away, everyone. Omkar, 1200 is the answer, agreed. Now everyone give me the answer of conversion parity price. Sahil, Dhananjay, Durga, all the live and recorded people in the class, are you able to connect? That sir, every share if I buy by way of debentures, so that is 1300 is the price of debenture divided by 20 share, that one debenture will give me conversion parity price 65. Now you guys tell me, for every share that you have purchased by way of debenture, every share that you have purchased by way of debenture, let me tell you what you're learning is entirely a different and unique way of learning. This is generally, first of all, institute does not explain anything about it. If you look at the study material, you won't even find, I guess, topping in the study material. You will find the question. And wherever it is being taught, it is not being taught in this chart driven manner, which is quite easy, right? My next question to you all is, people, do you people feel that you have paid an extra price to buy the share if you buy it by way of debenture? If you buy it, if you buy this share by the route of debenture, you have paid an extra price for it over and above its CMP. People, yes sir. I've paid rupee 5 extra for every share. And in percentage terms, how much have you paid? Sir, 5 rupees I have paid extra over and above its CMP of rupee 60. So 5 divided by 60 give me 8.33% I've paid extra, which is called as conversion premium. Whatever you pay extra, that 5 rupee, that 8.33%, whatever you pay extra, when you buy the share by this conversion route, because with respect to share, do you realize you have two ways you can buy it, one directly and one by way of conversion. So by way of conversion, when you buy it, you might have to pay extra, and that extra, everyone, is called as conversion premium. How much premium when you're paying when you're buying it through conversion route? But the question is, why would someone do so? If the share is directly available in the market, why would someone end up paying an extra price for this? The logic, everyone in the class, again is quite simple, very easy. Sir, obviously, because rate of dividend is generally lower and the rate of coupon is generally more. So for example, I have an option to convert the share bond after 10 years, which means, do you agree, after 10 years, if I convert, everyone please listen to it, after 10 years, if I convert, I will have the same value of share which will prevail in the market. So even if I buy a share directly, it will reach to the same place after 10 years. And if I buy a debenture and convert it after 10 years, it will reach at the same place. So why don't I enjoy my coupon, that extra coupon for the next 10 years is the point, which is why conversion price is generally higher than CMP, and which is why people are ready to pay this premium. Could I, everyone in the class, explain it? Requesting your responses that why do people pay extra? Because coupon rate is generally higher than the dividend rate. So for the next 10 years, people are ready to enjoy that extra income. Omkar, Durga, Dhananjay, Sahil, everyone in the class, are you people ready for this? Settled for this? Are you guys understanding the terminologies? There is no hardcore calculation involved if you realize. Just multiplying with something, dividing by something, deducting something from something is the flow. The main point over here is not to get confused between different terminologies. And in my opinion, through this chart, you won't get confused. Because otherwise, do you know what is the way to learn? I could have make you people write down the definitions with the meanings. But with this flow, you have a story now in your brains, along with the logic behind the story. You know what? One more thing. There is one more ratio that we will come across will be favorable income differential ratio. I don't have a space to draw it here. I don't have a space to draw it here, but I will try to make this chart look better at some point in future, not now. But one more ratio which says that suppose, so let me not explain it right now. Whenever we go to question, I will explain that ratio. Favorable income differential ratio. Favorable income differential ratio, something like this I will explain later on when I go there. Right now, one thing you all need to understand really well, very interesting thing again. Sir, what is a straight value of a bond? Sir, how many of you remember that basic calculation Omkar? You may not be able to connect to it, but straight value of the bond means, everyone in the class, if I ask you to calculate the value of the bond, how do you calculate it? Present value of future cash flows. This line Omkar you may not be able to connect, which is all fine, you won't lose anything. Present value of all my future cash flows is the value of the bond, correct? Sir, in your cash flows, you consider coupon amounts and you consider the redemption value. Agreed? People, if the bond is convertible, then do you agree in place of redemption value, I should discount the expected value of equity shares at the end of maturity? Suppose, for example, life of the bond is 5 year, redemption value is 1000, which is convertible into 20 equity share. The price I am expecting 60 after. The price I am expecting 60 after 5 years, equity share. The total value I will generate is 1200 at the end of 5th year. So value of a debenture is present value of future cash flows, which means coupon for the 5 years. But at the same time, redemption value of 5th year, which may be 1000 or which may even be 1200 if I convert. Requesting your responses. Do you agree the value of the debenture will fluctuate based on the expected fluctuation in the share price that will prevail after 5 years, or based on the fluctuation in expected share price after 5 years? Could you understand the last line which I said? Share price will fluctuate. So a debenture price will fluctuate. So for example, if the share price rather than 60, if the expected share price become 100 because of high growth in the company, the value of debenture will again increase, because people are expecting to convert their debenture into a higher value, and discounting that higher value gives me a debenture price further higher. Rest of the people in the class, could you understand? So straight value means if the bond will be a straight bond, if the bond will be an option free bond, in which if the bond will not have any option to convert, if there won't be any option to convert in this bond, then what will be its value is the straight value of a bond. People, if there is an option to convert, that is its actual value. We calculate what if there won't be an option to convert, how much will be the value is a straight value, which means value as if there is no option available of conversion into it. Could I again explain one more thing to you people, which means simply the present value of coupon and the redemption value ignoring the conversion option is people straight value. Which means, do you people agree? Do you people agree? If the share price increases, value of the debenture will increase. Normally, since if there is an option, if the share price increases, value of the debenture will increase. However, if the share price falls, value of debenture will not fall after a point. Why? Because conversion is not compulsion. If the people find that conversion is loss, they will redeem the bond at rupee 1000, which means after a point or below this straight value, value of debenture will not fall. If share price increases, value of debenture will increase. But if share price falls, value of debenture will not fall below straight value, because that is the minimum I will receive on the redemption date. Could I also explain to you the importance of a straight value? Requesting your responses on this, please. People, updating the entire chart in the English is a different thing. We will do it afterwards, but first I need your response on this. Are you finding it logical? Are you able to connect to it? Please speak up. So the last thing we need to understand is that, sir, do you agree for a bond which is convertible, the value in the market can be more than straight value? Because of that conversion option, which people think that after conversion we might gain, hence then they are ready to pay a higher price for it. So over and above straight value, the value of a convertible bond b, right? So if I have to calculate premium over straight value of a bond, I think you would be able to clearly understand it at your own now that, sir, CMP, so straight value for example is 950, but the price on the market is right now 1100. Sir, why is that? Because present value of future cash flow is only 950, considering redemption value, considering there is no option to convert. But since there is an option to convert, people are expecting increase in share price. Hence, people are ready to pay 1100 for the debenture in the market today. How much premium over and above straight value are they paying? Sir, it is 1100 minus 950 divided by 950 in percentage terms. Look at the word premium over straight value. Along with the logic, could I explain to you the terminologies? Everyone in the class requesting your responses. Settled are we with the entire concept? Please validate. Yes. So intrinsic value as per this, it is the minimum value a bond can have. ठीक है. Acha, one more terminology. Premium over straight value is also called as percentage of downside risk, which is logical, right? Because do you agree the value of the bond cannot fall below straight value? So if the price of the bond is CMP right now, can I say the maximum downfall will be till the straight value, not below this? So how much is the downside risk in the price of the bond? From CMTP to maximum of straight value, not below that. Correct? So the same thing, premium over straight value is also called as percentage of downside risk, is what I wanted to tell you. And this completes the entire discussion, right? Where I think this chart is able to explain to you different section. This section, or maybe this entire section, is related to conversion involving shares into it. This particular section has nothing to do with conversion of shares as such directly. Indirectly, obviously, it has, because the price in the market is higher than straight value only because of conversion option. But you don't have anything to do with the share price in the section which is above over here.